late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back to Data Driven Value. Today we're going to jump into the charts in this edition of Technical Tuesday. We're going to get right into things, take a look at what's going on in the market. So without further ado, we'll jump right into the charts here. We're going to start on our dollar here, so the DXY, the US dollar index. The reason that we follow the dollar is because we want to ensure that as investors that our risk assets, so tech stocks, Bitcoin, crypto, these are all kind of riskier assets. They generally do not perform as well during times of strength in the dollar, and they kind of outperform when we have breakdowns in the dollar. So we do keep track of it to have a better idea of what's going on in the markets. We see here that we kind of came up, put in our first top right here. So we've got this resistance zone right here. We went through our kind of sideways consolidation phase through here, but now what we are looking at is a technical uptrend kind of on the lower time frame here. So if we zoom in to the daily chart, actually it is a little bit at risk right now, but we did see, we came down here kind of within our Fibonacci region here, and we got back above, so we're above our 200-day moving average, and we're not currently above our 50-day moving average. So we're going to want to continue to see the dollar break down. I'm not sure what we'll see going forward. You know, we did reverse it, so we had kind of an uptrend structure right through here, put in this lower high right through here, and then reverse that to the low time frame downtrend. But we are finding some support at this support zone right here, previously marked, also holding that 200-day moving average as support. Our MACD is oversold, our RSI is kind of more oversold and curling up, and our directional movement index is also signaling a potential kind of uptrend in the near future. So we're going to keep that in mind. We'll watch. We need to take out these highs here, essentially. Otherwise, we're just kind of resume that downtrend structure. Ideally, we do want to break below this 200-day moving average for Bitcoin and our other risk assets to do well. Alternatively, we could end up breaking out and attacking these highs again. So watch for something like this. Either we're going to break out, back test, and then maybe retest these highs right here, see what happens. You know, not really looking to over risk ourselves when the dollar is showing a lot of strength. And then alternatively, we could also just break down to the downside, assuming we aren't able to take out these highs right here. You know, we could just end up rejecting here, bouncing from the 200-day, getting a little bit of relief, but ultimately flipping this current support zone into resistance and kind of coming back down to some of these lower targets. This is what we're going to want to see for our risk assets to do well. If we start to see the dollar really showing strength, going back up, then yeah, it's not going to look good for our risk assets. I've talked lots about waiting for confirmation on the charts, not getting too aggressive during times like this. This is exactly why I say that. And if you did kind of get a little aggressive during those times, you know, some of the assets we're looking at today are down a decent little bit. So yeah, that's why I say just wait for that confirmation, wait for the charts to tell us what's likely going to happen. Until then, when I say we're in no man's land or I'm sitting on my hands, I'm simply saying that there's no real trade opportunities that really look good to me for me to take that risk of buying kind of not an opportunistic setup. So we're just going to flip down. We also see our US 10-year here up a little bit as well. So strength in the dollar, strength in the 10-year. We see gold up, we see silver up. So obviously risk off assets doing much better. We see the SPY did open green, but barely, and it looks like it might end up closing red today. NASDAQ, Dow Jones, and the IWM, except the IWM a little bit green as well. But again, NASDAQ, Dow Jones down. Our SPY is likely going to flip red. Our dollar's strong, our 10-year strong, gold and silver are strong. That's telling me that risk on assets are going to suffer a little bit here in the near term. We do see the 10-year holding that 50-day and 200-day uptrend moving average. So we'll just flip over to the SPY, take a little look here. So we do see on the daily chart, looking at our momentum indicators, losing a little bit of momentum on the directional movement index down here. Also on the RSI, you see we're curling back over a little bit. We want to see that curling up. And the MACD, it looks okay, but we do see a pretty green histogram right here, and it looks like we could be putting in that double top on the MACD right here, destined to kind of curl back towards our bearish cross and due for a bit of a retracement. That being said, I'll flip to the actual price action of the chart because it's not the worst looking. We'll flip to the 4 hour, get a good idea. So we did see we were kind of in this structure right here. You know, we broke out and then we kind of put in this temporary lower time frame downtrend structure, but we have broken it now, and right now we're holding kind of these prior highs as support. So as long as we're holding kind of support right through here, right with that down sloping trend line and this horizontal support right here, you know, we can just continue up. We do have support with our volume shelf right down here, but it is important to note we don't really have any major buy orders until down these lower support levels right here, kind of coinciding with our upsloping trend line. So we'll take a look at the low time frame momentum indicators, get a little bit better idea. Also showing a little bit more oversold, or sorry, a little bit more overbought, overheated. The directional movement index pushing that down kind of bearishly, and it looks to be like kind of flattening out or topping out right here. So that's another thing I want to show you guys. This is a technical bearish divergence. We've got a slightly higher high on the price action here, and we've got that lower high on the MACD and RSI indicators right here. So a slight bearish divergence. That's something you're going to want to pay attention to. It can signal a potential upcoming trend change. That being said, we can get another break up before we get that ultimate macro kind of breakdown and retracement that's kind of signaled there. But for now, as long as we're holding this support right here, you know, I think we're doing okay. It is price discovery up here for the SPY. So just watch that, and yeah, just make sure that we are holding this sufficiently as support. As long as we can build support here, give time for our lower time frame momentum indicators to really kind of reset themselves. So if we flip over to the 1 hour, try and get an even more detailed, you just see essentially we're oversold, or sorry, we're overbought on the 1 hour, the 4 hour, and the daily. So it's not looking good for the SPY. This could have just been, you know, another little push up to lure in some late longs before we experience a bit of retracement. So just keep an eye on that. That's why I'm not getting too aggressive. I want to either have a confirmed breakout that looks like it can support another leg up. Otherwise, you know, we might just be due to break down, back test here, get rejected, and ultimately come back to these lower levels of kind of support and demand. Similar here, it's also coincides, with this upsloping trend line. So keep an eye on that. Yeah, so SPY looking okay for now, but we don't really have a ton of volume. You know, we didn't get the same kind of volume that we're getting over here. It seems to be slowing down, so keep an eye on this. I'm not getting too aggressive in the stock market because a lot of assets are at or near all-time highs. So it's a pretty risky time to kind of be taking substantial or aggressive positions in the market without confirmation. You know, we're stuck right at the all-time highs, and yeah, we don't buy resistance, we buy support when it is supported by our thesis, which includes our momentum indicators, it includes our price action and candlestick patterns, and kind of the trends that we find. So keep an eye on that, and remember, we wait for confirmation of trend as well as waiting for all our other factors to support that thesis as well. I showed you guys all those in the prior videos, breaking it down a little bit more. We're going to flip to TLT, take a look here. So we did almost break out here, but rejected back into this down sloping trend line. So just more consolidation for TLT. This is a lower high right here, so watch this low to make sure it holds. Otherwise, we might be due for kind of that reversal. So we'll see what happens. We see gold up another 1%, but we do have it kind of rejecting here. There is a bit of down sloping resistance right there. So I'll show you that. We have this right through here. Essentially, yeah, kind of similar to what the SPY looked at, but it was able to break out. We are in kind of that low time frame technical uptrend, so gold's doing well. It's holding our point of control for our VRVP right here, but we are in pretty in kind of a zone of a distribution zone. So a lot of sellers right through here, and not a lot of buyers for gold until we get down to these 28 and 2900 levels down here. If we look at it on the daily chart, you know, it looks just just amazing. Like, beautiful breakout, sustained uptrend. It's just showing so much strength. We look at our momentum indicators here. So again, MACD curling off there, back upwards, and RSI heading towards that bullish cross. DMI also looking pretty strong here, much better than some of the other assets. So gold doing well, silver obviously getting a little bit of a bounce here, kind of into resistance. So what I actually see here is a bit of a downtrend breakout and back test. So you see here, we're stuck in this downtrend. We broke out, we back tested it as support. We're holding that 200-day and that 50-day moving average, and we're able to kind of go up, holding that uptrend structure all the way through here, getting some resistance through here. So we just want to make sure we're holding those lows. We've got quite a bit of support with the VRVP rate through here. Take a look at our momentum indicators, kind of similar to gold, also could support that another move up. Take a look at the 4 hour. So yeah, the 4 hour looks more bullish, which means in the near term, we're likely to be able to get that other little push up and hopefully maintain that uptrend structure. But we'll flip over to the stocks for now. I'm going to cover a few different stocks. We're going to look at So we're going to start with GDX here. That is the VanEck Gold Miners ETF. So a good way to get exposure to various different gold miners without having to kind of do the individual due diligence and picking and choosing of those individual miners. So if you're looking for gold miner exposure, you know, these ETFs are good options. There's also GDXJ. They look very similar. This is just the junior miner, so it is going to be more volatile for the most part than GDX here. But GDX, what we were watching, we saw this wedge here forming, just coming back, testing it as support multiple times. Also resistance, holding it below. We saw a beautiful breakout here. That's what I talk about, these long downtrend breakouts. Back test as support above our 200-day, and also uptrend structure there. So a beautiful price action. That's what I kind of talk about, waiting for confirmation. And if you got in here, you know, it's doing really good trade for silver. We do have this resistance up here at $44. It's going to need to take out these highs to maintain the potential for a more macro uptrend. So we will just watch GDX there, see what happens. But we'll flip down to Meta here, down 3% on the day. So we also see here for Meta on the weekly, you know, we don't really have much buy orders until these lower levels here. You see basically Meta shot up so fast that there was very little volume traded up through here. So pretty much from $390 up to $720, there really hasn't been much volume traded in Meta. So pay attention down here to the point of control on our VRVP. Again, point of control is the longest or largest horizontal bar within the volume profile. So watching this right here, and then we do see it's just gone on this run since 2022, basically non-stop. You know, that's crazy extension. I know I'm not really looking to buy into Meta on kind of based on the extension there. If we look right here, our 618 Fibonacci from this swing low to this swing high is right above our point of control. So if we were to, I mean, I'm not going to say this is going to happen, but in a recessionary case, we could revisit levels this low. So if we were to come back to $340 for Meta, I think that would be a great opportunity to accumulate some of Facebook Meta. If you don't have a position, you know, I'm not getting too crazy up here because I tell you, you know, we don't buy resistance. This is an all-time, this is beyond the all-time highs, like just keeps going up, you know, but nothing goes up forever. You know, they said that about MicroStrategy. They said that about NVIDIA, and ultimately they dropped 30, 40, 50% back to earth and gave us those opportunities that we're waiting for. That's why I tell you to practice patience and to really manage your emotion and manage your risk. So by buying up here, you're not managing risk. You're kind of FOMOing in because everybody's telling you it's just going to keep going up and up and up. You know, I'm not willing to take that risk myself. I'm just going to wait either patiently for the entries that make more sense, or I'll look at other assets, guys. So there's always a bull market somewhere. You don't have to buy into an asset just because everyone's kind of telling you that it's going to go up. We've witnessed that so many times with Bitcoin especially. That's also why I've been telling people that follow me, just be careful right now. I did see a lot of warning signs in Bitcoin and markets, and we've actually dropped quite a bit since I shared those warnings. So I was telling people, don't get too aggressive, just wait, be patient, wait for that confirmation, and then follow your strategy. That's all I do. It takes the emotion out. So we're going to flip over to Tesla here, take a look at Tesla. It did come back down. It's stuck under this downsloping trend line on the high time frame, but holding relatively well. We did get a nice little Fibonacci retracement in here into our first demand zone right there, sitting well above the point of control here. If we do get a $277 Tesla, you know, it might be looking at starting a bit of a position there. We also see it kind of has support all through here. If we do look here, so support all through there, and also coincides with our 786 above the point of control, and you see our 200-day moving average. So even for a bit of a bounce trade there, it could be a decent opportunity for Tesla. What we're going to want to make sure, though, is we wait for our confirmation. So higher highs, higher lows. We do see kind of just neutral-ish in terms of our momentum indicators on the high time frame. If we flip to the daily here, we're still stuck in that downtrend structure, lower highs, lower lows. So until we reverse that, then we're not getting too aggressive, waiting for confirmation. We're not seeing the volume come in yet like we did over here. So yeah, not too crazy. We'll wait for that confirmation on Tesla. If we take a look here, so what you're going to look for is either we're going to hold these lows here, put in a higher high, and then put in a higher low and look to bounce and break out of this trend here, in which case you'd be looking to enter right around there, assuming that the momentum indicators are sufficiently reset, meaning they're now oversold and it's going to support that move up. Otherwise, if we keep moving up from here, we would look at that breakout here, back test, and then we're looking at kind of attacking these higher levels here. So it's all about waiting for confirmation. You can see entering at $370 as opposed to $355. In the long run, that little percent isn't going to make a difference. That's why I tell you, don't miss out on dollars by pinching pennies and just taking additional risk. You know, a lot of people say, oh, well, you're never going to time the top or bottom, but I'm trying to point out to you guys that you don't need to time top or bottom. You just need to position yourselves in the trends, take advantage of the price action, and then get out when the warning signals show up. The more you do this, the more you're able to execute this without emotion, the better you're going to be able to compound returns over the long term. So flipping over to NVIDIA here, this is one I did say was a great buy down here. We came back tested this as support. We're breaking out. It's nice. We're just at this point of control on the volume shelf for the daily. So we do see, though, we're stuck in this downsloping trend line. So resistance right through here. And we also have this resistance here where it did break up into this resistance zone. So I want to see this hold as support, and then NVIDIA can even just continue climbing up. You know, the price action looks pretty good. We do see the reversal of that uptrend structure on the lower time frame. So we want to see these lows here hold. Make sure, yeah, this is holding, and then we're going to come back. Maybe we come back and test one of our Fibonacci levels. So we see here from the swing low to the swing high. Yeah, if we come back to our Fibonacci zone here, that's going to risk that uptrend structure we've just built. So not if we break below this low here, you know, that's my kind of signal to cut the trade if you're in it. That being said, we're in it from down here, so you know, it's still a decent move if you were to get stopped out up here. Otherwise, you know, I did say it's worth taking profits, a little bit of profits into the resistance zone here. Nothing wrong with that. No one ever went broke taking profits, guys. That's what I want to try and get into people's heads. You know, a lot of people think they just have to buy and hold forever, and that's how you end up round tripping. So essentially riding it all the way up and then kind of getting emotional, thinking it's going to keep going up and having to ride it all the way back down. It's very discouraging. So yeah, don't forget to take profits when they do come. Yeah, and we'll continue trying to compound those profits over the long period by utilizing our strategy that I constantly talk about. We will take a look at our momentum indicators on the daily. So yeah, looking a little bit overheated here. RSI curling over. MACD histogram quite green. Looks like we're going to put in a lower high on the MACD. And yeah, it looks okay on the directional movement index here. But yeah, we want to see the ADX getting above there. We will see if it's enough momentum to really hold this kind of uptrend reversal structure. Flipping over to Amazon. Taking a look here, kind of more bearish DMI setup. We do have red on the histogram, RSI coming down, not really showing a sign of kind of curling back over yet. We are stuck under resistance of this order block here, as well as our highs and this volume shelf right through here. We do have a little bit of a demand zone right down around 215 to about 218. The point of control for Amazon right now here is down towards 190, and we see our 200-day, we're holding it. So not really interested in Amazon at this point either. Maybe if we see, if we come back and back test here as support, I'm still going to want that confirmation of a trend reversal. So if we come back here, maybe we come back down, retest here, and then we just have to, again, put in the work where we're getting that uptrend structure. And then I'd rather enter here with confirmation of a reversal than entering right here and hoping that we're just going to reverse. So that's what I talk about, that strategy. Kind of similar to how that NVIDIA chart looked. Went up here, broke out, back tested, came back to our level that we marked, and then went up for a nice little move there. So paying attention to Amazon in the future, not really actionable right now in my opinion. So we also see Apple. Again, lots of stuff, just lower highs coming into resistance. I just see more consolidation needed. It kind of supports that thesis that the market's in a bit of no man's land, I think personally. I do think we're either one good news or one bad news event away from a pump or dump. So if global trade war tensions continue to escalate and things kind of go awry on the macroeconomic front, it's not going to look good for markets. It's going to be a pretty tough, at least near-term move, I would expect. And then on the flip side, maybe we get some bullish unexpected announcement from the new administration that could send us up on another little leg up there. So I don't want to trade based on speculative news and the potential, because it could go either way. That's why we wait for confirmation. You're going to hear me say it so many times, you're probably going to get sick of hearing the word, but I want to drill it into your guys' head. That's how we make sure that we get on the right side of the trade, making sure that we have the confirmation and our thesis is supported by all the factors that I've shown you. Flipping over to Google here, we do see it was in this kind of uptrend structure here, so we had a bit of a parallel channel. We've broken below it now. We lost our 50-day, so we are still above the 200-day. We've got this upsloping trend line holding as support. If we do look at our Fibonacci levels from this swing low to this swing high, we're just into our 0.5. So kind of interesting, that confluence of support right through here with this upsloping trend line, 786 to 618 Fibonacci. We've got our 200-day moving average, and it's also quite a bit of horizontal support as well. So watching Google for that one right there. And you guys know I'm going to say, wait for confirmation, come down, and let's put in that higher low, higher high, higher low. We're still in at the 618. That's still the ultimate goal. Still a good entry, and we can try and see where that trend tops out at that time. But waiting for confirmation as always. Take a look at our momentum indicators. Looking not very good. The DMI, we've got our DMI minus line on top. The ADX line pushing our DMI plus line below it. RSI trending down. MACD trending down. So I do think Google has more consolidating left to do there. We're going to take a look at Newmont Gold here. Beautiful bottom structure here. That's what I said, wait for confirmation, enter on confirmation, and that's the uptrend that we want to ride. So Newmont's looking really good. If we take a look here from this swing low to this swing high, we might look for this entry right down here, kind of around the $40 mark if you are interested. I also just referenced the GDX ETF. So Newmont's part of that ETF too. If you want to just get a kind of a broad exposure to gold miners, then I would kind of recommend the ETF in itself. It's just a little bit less risk than just buying into an individual company if something were to go wrong in that event. We'll flip over to Dollar General real quickly. We do see coming down, so this is what I'm talking about, guys. Downtrend structure. We put in that higher low, higher high, higher low, and we're holding this structure right through here, getting above that 50-day moving average, holding this strong horizontal support. So we'll see what happens with Dollar General and dollar stores going forward. I did kind of point out how during times of economic uncertainty or economic weakness that dollar stores go on to outperform because the cost of living usually raises. People can't afford to shop at the same places they normally do, and then we do just kind of get these dollar stores, they get a little pop, they start to get more business. Flipping over, we'll look at Palantir really quick. This is one, it's just insane. All these politicians buying into it, making crazy trades. Massive gap right through here. It's kind of just a scary chart to me. I'm not really interested in buying into it. If we get a substantial retracement back to higher support zones, I might look to start a position, but this rocket ship's already left. You know, we're not going to chase it. So just moving on to our next opportunity. Dell, this is one I've been talking about, guys, and this is exactly what I said. Not exactly the price action that I kind of pointed out, but you do see we came up, we got a little retest, we held the higher low, and now we're broken out. So Dell is looking really good right now, actually, as long as it holds these lows right through here. If we come back, retest somewhere down here, let's say we pull our low time frame Fibonacci from this swing low to this swing high, we do see our entry right here, you know, around 111 up to 113. You might look for a swing entry on Dell. If we take a look at our momentum indicators, see if they do support that move as well. Yeah, looking good. This is better. We want to see, yeah, that's exactly what we want to see. This ADX line getting above the minus line. RSI going up, MACD going up. So looks good for Dell. We did kind of see a bit of strength from more of the US-based chip manufacturers. So we saw Intel, big pop here, Dell, big pop, AMD not getting much strength, but this is because essentially the government wants to prioritize made in America chips and infrastructure. So Dell is a major AI provider for servers, and Intel is a major provider for chips. So obviously catching a bit of a bid on that news. We see BABA still going up. It's probably beyond the support that, or kind of beyond our target for sure. So yeah, BABA's been a really interesting one, just blowing out of the water here. If we start to see China really stimulate their economy too, we might even see that continued strength from BABA. If we look at it on the very high time frame, it's still quite a ways off its kind of traditional highs there. We do see, if I zoom out, yeah, look at that. Like still just way off its highs. So you do see, you know, even with this big move right here, it's just not really like, it's not kind of anywhere near the potential. So sorry about that. We'll flip back. So what I'm looking at here is you're going to look for an additional entry. Again, we pull our Fibonacci tool, swing low to swing high. Look for that entry in BABA under $100 as that swing potential, as long as the momentum indicators support that thesis. And looking at it on the high time frame, yeah, beautiful setup. DMI looks very bullish. RSI kind of getting up there, slowing down a little bit. So we might be due to start that correction, but we have taken out these highs. So we've kind of negated our downwards consolidation. We're holding that uptrend structure. And as long as we hold these lows right through here, then BABA looks good for a potential swing trade. You know, if you're entering in here, maybe we're holding up to this, distribution zone right through here, kind of with confluence of that 0.5 Fibonacci. Looking at that, you know, we're either going to enter here, and then if it keeps going up, we'll just adjust our Fibonacci level as we see fit. Moving over to AMD, kind of just stuck in these downtrends here. Getting a little bit of support right now, but yeah, long downtrend, so we want to see that confirmation and kind of what Dell did where we saw right through here. Yeah, we saw it come down here, go up, and then yeah, we're waiting for that. So AMD, similar boat. We're just waiting for either the breakout or the reversal price action to print itself. So flipping over to Intel. Intel was one I'm actually like pretty interested in, especially with that news regarding kind of US domesticated chip manufacturers. So we do see coming right into resistance. Watch for that higher low entry somewhere around $21.75, even down to about $20.50. Putting a stop loss below these lows out here just in case, and then holding it up to this resistance down here. So we've got kind of that golden zone resistance, we've got a down sloping trend line, and we've got this horizontal resistance all stacked right up here. So if you were to take that entry, that's where I would look to definitely take a lot of profits off the table in that event. Flipping over to crypto really quickly, we're not going to cover too much because it's a pretty red day. Everything's kind of down. Bitcoin dominance is up. I talked about all the altcoin, so I talked about Bitcoin dominance, Ethereum, Bitcoin, others dominance, total 3 in the video yesterday. I did say that they didn't look good and to wait and be patient, and this is exactly why. Look at this, just dumping across the board. Some altcoins down like 10%, 5%, 7%. So if you just listened, if you were just patient, trusted your strategy, and didn't get emotional, then you didn't get caught on the wrong side of this move. That being said, there might be some opportunities. So I'm personally taking a very small, or starting a very small swing trade position in Bitcoin. I'm gonna look to kind of build it all the way down to about 89,000 with a stop loss protecting it. So what essentially I want to do is just kind of test these levels of support. We do see right through here, this is our 91,000 level. So we came down to our 786, start that position right there, very small buy. Remember, the initial position is you start with a small buy and then you ladder your buys up as it goes to your lower targets. So if we go to 91,000, kind of 200, I'm going to add to that long, and then I'm also going to add to that long at 89,000 right down here, right through this support, and I'm going to have a stop loss right underneath all this support. So essentially buying in on a dynamic DCA basis. So we start here around 94,000, we increase our buys at 91,000, we increase our buy again at 89,000, and then we have a stop loss at 87,000. So ultimately you're going to end up with about a cost basis of 90,000, kind of the way I do it. And then if we do break below, we'll go down to kind of these, we get stopped out. You know, you don't lose that much. It's just a little risky. It's just a little bit of a short-term hedge position. So you know my thoughts. During these sideways kind of choppy markets, it's pretty hard to get aggressive and take large positions. That being said, there is opportunities here. So last time, this is what happened. We came down here, we tagged these levels, and then we built a swing position all the way through here, same exact plan, and we were able to ride that up and get about, you know, it was only a 17% return, but it was a pretty quick return there, and just doing that multiple times. So you see, like, basically we've come down, we've kept tagging this zone here, there's just so much support through here. So there's been multiple times we've kind of come down to the low 90s and then allowed people to just open a little bit of a swing long as that hedge for the potential reversal to the upside. And then you could have compounded a lot of different returns there. So don't really underestimate the power of kind of range trading as well. That being said, really understand, make sure that you're watching, you got to watch the low time frame a lot closer. You got to watch your momentum indicators a lot closer. So just again, building that swing position from about 94,000 down to 89,000. Stop loss here at 87,000, protecting us from that further downwards consolidation or breakdown. We'll look at dominance quickly here. So similar, I drew this path and it looks like it's playing out coming into resistance. We will see if it holds the higher lows. We do want it to continue breaking down, but dominance looking strong, and that's why all the altcoins are looking weak. So a few ones are kind of slightly in the green here. AIOZ, a big candle pump up here, and then ultimately coming back already. So interesting to see. A few are really doing well, kind of relatively in terms of like relation to the market, excuse me. But yeah, most of them just red. So that's also, I'm just going to bring it back. That's why I say we wait for confirmation. We're patient. We're not emotional. We just follow the charts and the data. That's all there is to it. We'll wait for the setups to come to us and we'll execute them when we see fit. So if you guys like the content, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.